Welcome to The Explainer. Today we're going to tackle a situation that I'm sure drives a lot of Pakistani investors absolutely crazy. You know the feeling. You see the news, the KSE 100 index is soaring to new heights, but then you check your own portfolio, and your stocks are just sitting there, or worse, they're actually falling. So what is going on? Let's break it down.
And look, this isn't just some theoretical question. This is a real question from an investor, someone just like you, trying to make sense of the market in Karachi. And I'll tell you, understanding the answer to this is really the key to smarter sarmayakari or investment. So let's get right into it.
Okay, so this is the situation, right? On one side, you've got the KSE 100 index in a clear bullish trend, hitting record highs. But on the other side, you could be holding a really solid company like Anglo Polymer and Chemicals, EPCL, and it's heading in the complete opposite direction. It seems totally backwards, but trust me, there's a very clear and logical reason why this happens.
All right, so to figure this out, the first thing we've got to do is zoom way out and look at the big picture. And the first thing to really get your head around is that the stock market moves in these long-term cycles. You can think of them like seasons, and the KSE 100 index, well, that's our map for figuring out which season we're in right now.
The best way to think about it is like this. The market has a rhythm, a totally natural rise and fall. We call this the market cycle, and it's a bunyadi, a fundamental concept. I'm telling you, if you can just grasp this one idea, you're already way ahead of most people.
So every single cycle has these four basic stages. And where are we now? Well, the consensus is that the PSX is in a bull run, which is this markup phase. Knowing this is so powerful because it means you can set your strategy to go with the market's momentum, not fight against it.
But, the index isn't some magical number that just floats around on its own. It's just an average, and it's driven entirely by the performance of the most influential companies within it. So the real question is, who's really behind the wheel here?
This is a super important point, so really let this sink in. The index doesn't move by itself. It moves because the stocks inside it are moving. And more specifically, it gets pulled up or pushed down by the heavyweights. Those are the companies with the biggest market capitalization.
And this chart really shows you what's going on. A handful of sectors have a huge influence on the index. I mean, look at this. Banking, oil and gas, and fertilizers. They carry so much weight. So if these sectors are having a great day, the whole index can look fantastic, even if a bunch of other stocks are doing poorly.
And here they are, the big players, the giants of the PSX. When companies like UBL, Lucky Cement, Faji Fertilizer, or OGDC are doing well, they have enough power to literally pull the entire KSE 100 index up with them. And that is the exact reason the index can be green while your individual, maybe smaller stock is struggling in the red.
Okay, so now we know the why. The big question is, what do you do with this information? Well, you use it by taking a really smart, really simple, top-down approach to your investing. It's a logical process that's going to help you make much better decisions.
And this is your playbook. It's a simple four-step process. It's like a funnel, right? You start wide, looking at the big picture of the market cycle with monthly and weekly charts. Then, you narrow it down to find the strongest sectors, those heavyweights we just talked about. And only then, at the very end of the process, do you start picking individual stocks.
I love this saying because it just perfectly captures the whole idea. The river's current, that's the overall market trend, the KSE 100. The fastest boats, those are the leading sectors and the strongest stocks. It's simple, really. You want to align your sarmaya with the most powerful current in the market, not try to paddle against it.
All right, we're at the final step, and honestly, this might be the most crucial piece of the entire puzzle. You see, it's not enough to find a stock that's just rising with the market. You want to find a stock that's rising faster than the market. And that, my friends, is the game-changing idea of outperformance.
I mean, think about it. Why would you want a stock that's just average, that's just keeping up? The smartest investors and traders are always on the hunt for the leaders, the stocks that are really leading the charge and beating the index. That's where you find the potential for real munafa. This table just makes it crystal clear. An underperforming stock, like the EPCL in our example, is basically dead weight in a rising market. You want to avoid that. An outperforming stock, on the other hand, is like a rocket ship. Its momentum is even stronger than the index itself. This right here, this is your ideal target. So let's wrap this all up into one key idea. Use the KSE 100 index to confirm that yes, we are in a bull market. But then do your homework and put your money into the specific stocks and sectors that are doing even better than the index. You have to find the leaders.
So from now on, when you see the KSE 100 shooting up but your portfolio's kind of lagging, you won't be confused. You'll know exactly what's happening. By understanding the market cycle, identifying those heavyweight movers, and focusing your search on true outperformance, you can navigate the PSX with so much more confidence. The power is back in your hands. Inshallah, your next investment will be your best one yet.